Let's talk markets to start the hour and the market's response to Friday's disappointing jobs report. Joining us right now is Mohammed El-Erian. He's advisor to Allianz and Gramercy. He's also the president of Queen's College, Cambridge. And Mohammed, the markets really seem to shrug off this disappointing news. Jobs were much, much lower than had been anticipated for April. Are you able to shrug it off in the same way?
So I think the bond market was right to shrug it off because it realized very quickly this is not a demand issue. This is either a supply issue or a data issue. So it shrugged it off quickly. The equity market simply looked at the Fed's perspective and the notion that this massive miss will reinforce the Fed's conviction that it should stay as loose as possible for a long time. So I think the market reaction after a few minutes turned out to be very rational.
What do you think it is? I mean, as an economist and as somebody who looks through all of these issues, is this a temporary issue? Was this a data problem? Is this something that you think will be corrected quickly? Or do you think that this is going to be a long, hot summer for the Fed and people won't really come back in force until the fall when kids are back in school, especially because the jobs that were created came from men, not from women?
Correct. In fact, female labor participation unfortunately fell. Look, could it be a data issue? It could be. We'll know more. But if you simply look at demand and supply, it is very hard to argue that it's the demand problem. Every indicator we look at, whether it's macro or whether it's the company level, suggests that people want to hire workers. So it's likely to be a supply issue. There are short-term supply issues. One of them is the unemployment insurance benefit discouraging people from going back to work. Childcare is a big issue. So are schools closed? That's a big issue. Now, these three will resolve themselves over the next 3 to 4 months by September. The bigger question is there a fundamental skill mismatch going on? Has the economy evolved in a way that the labor market has not evolved? We need to look at these issues. I think it reinforces what the Biden administration is trying to do on infrastructure, on human infrastructure, but it does raise a question about what the Fed is doing if it is indeed a supply issue.
When you say that the labor market may have evolved or more quickly than the labor force has, you mean we've gotten more technical? You mean we've gotten more automated? You mean we need different skill sets to actually fill these jobs?
Correct. And that's the biggest fear we have, because what we don't want is a jobless recovery. The Fed is absolutely right in pointing to 8 million people who lost jobs a year and a bit ago when COVID hit and are still not back in employment. They're right. But there's a massive question mark as to how many will actually be able to get jobs again or be willing to get jobs again. And we won't know this for a few months. So this is really consequential, not just for the marketplace and for policies, but also for societal well-being.
Shepard Smith here. Thanks for watching CNBC on YouTube.